Hey guys, welcome to my second Bitcoin investment video. I made my first video about 2 months ago. If you'd like to see that, I'll leave a link in the description. And today's topic, it's about inflation and how Bitcoin is presented as probably the best monetary policy against inflation of the US dollar specifically. So let's take a look at this issue that we're dealing with here first. It's called inflation. And this is an issue that happens when you print too much money. And this is not an issue to be ignored anymore. And I really feel like I need to make this video because I don't think most people understand how serious uh, situation we're in and how big of a trouble that the US and basically the people of the world are going to be facing in the coming years in this situation. What evidence do we have against inflation? Okay, let's take a look. Number one, 75% of US money supply is printed in the past year. Let's take a look at this M1 data. This is the Federal Reserve website. And you can see since 1960s all the way to 2020, the money supply has been going up gradually. Now, what's the steepest incline was since the financial crisis of 2008, right? We went from like 1600 to basically, uh, you know, 4,000. So that's about, double, more than double. That's a pretty steep incline. But look what happened for the past year. We went from 4,000 all the way to almost 19,000, pardon me. And that's just an absurd amount of increase. So if you calculate this in terms of percentage, that is about 75% of M1 money supply. So, so 75% of M1 money supply is essentially printed in the past year. That's just insane. And this, by the way, this doesn't even count April. So this is until the end of March. And we know more money is coming in April because the Fed has been buying assets like crazy. Now, how the Fed release these money they're printing as liquidity into the market is they do it by buying back assets, and they hold these assets on their balance sheet. Now, what's been happening is since the March of 2020, the Fed has been increasing the asset buying like no tomorrow. So right now, the Fed holds about $8 trillion of total assets on their balance sheet. This is unprecedented. Look at the just after the financial crisis, the Fed has about $2 trillion, $2 trillion of asset they hold on the balance sheet. Now they have close to $8 trillion. Insane. Okay, let's take a look at the next evidence we have. The Fed alone holds $8 trillion assets and it's buying $120 billion a month indefinitely. Yes, so the Fed has come up with this new release. Basically, what they're saying in this article, and essentially what the chairman of the Fed is saying is they're going to keep the interest rate at 0.25% until 2024, at least, and they're going to keep buying $120 billion a month in asset purchases every month. And they have no date of when they will finish this asset buying program, which means that this asset number you see is only going to go up by 120 billion every single month. Okay, let's take a look at the other statistic that we have. U.S. government indebted for $28 trillion of national debt. Let's take a look at this website. It's called usdebtclock.org. This is a really good website because it really highlights how serious of the situation is. The U.S. government has a huge budget deficit right now, and they're still printing more money. They're spending the money they don't have, and they do that by borrowing through their national debt. And now they have $28 trillion. I don't even think they're ever going to pay this back. This is equivalent of almost $250,000 per taxpayer money, and we know that this is the money that we're never going to see again. And this is a very serious situation. And let's take a look at other data we have. The US dollar has been losing value against other currencies. So I found out about this because I have a US dollar stock investing account. And I look at my US dollars converting back to Canadian dollars. And I realized that I've lost about $1,000 since I changed my Canadian dollars to US dollars. And now just holding that US dollars, I lose money. And I lost money because of inflation. Take a look at the data we have here. Canadian dollar versus Canadian dollar, US dollar versus Canadian dollar, down 14% since March 2020. US dollar versus Australian dollar, down 18% since March 2020. US dollar versus euro, down 10% since March 2020. Take a look at these charts really quickly. I went from 1.4 to 1 US to Canadian dollar to 1.23. And in euro, we went from 0.91 to 0.83. Australian dollar, it's even more ridiculous. We went from 1.57 all the way to 1.29. That's about 18%. So this really represents how much of purchasing power behind the dollar has deteriorated over the past year or so. And by the way, another 4 trillion more stimulus money coming. And this is the article that I saw this morning. The Congress is now looking at the $4 trillion options of stimulus money. And Yellen says there's no issue with inflation. Yeah, I can't seem to buy that argument. A year ago, if you told me about this issue, inflation being a concern, I would have totally dismissed it. But now I don't think you can really ignore this issue. And let's take a look at other interesting things. I saw this tweet from Dan Held, and basically says official U.S. inflation rate 1.5%, oil up 80%, corn up 69%, steel up 145%. I not verify these statistics, but they're probably roughly correct. So what's that telling us? It's telling us that the inflation has gone up by 1.5%, and all other commodities, which are probably not supposed to fluctuate as much in value, have fluctuated double digits, some even triple digits in terms of US denominated dollar. Now, this tells us these commodities are probably more or less correct because they're traded at the market value, and the market usually is right. And the US official inflation rate, 1.5%, is probably way off from what the actual inflation is. I don't know what the actual inflation rate is, but it's definitely not 1.5%. Probably, if I have to guess, I'll say at least it's 10 or 20% of inflation right there. And that's huge amount, right? Take another look at the another tweet by Blockfolio. And Blockfolio says, Dogecoin just made up money with infinite supply. And the Federal Reserve is looking very interesting. Look, here's the argument that most people have against Bitcoin and a lot of cryptocurrency. They call it made up money, right? It's made up. It's not real. There's no tangible basis for those money, for those currency. But we know for a fact that the US dollar also is made up. It's not based off anything right now because we have separated the pairing with gold since 1973. So it's no longer on parity with the value of gold. So it's basically made up money, and the Fed has been printing money like crazy. So what's the take from this whole point here, right? The whole point, now I go back to my investment thesis after presenting all that data that shows you how terrible of a situation inflation is right now regarding US dollar and eroding the value of the US dollar. Is the message is clear. It's written in big bold letters: buy Bitcoin, right? Now, imagine this from a really wealthy person or a company perspective. Now, imagine that you are a company holding billions of dollars in U.S. denominated currency in U.S. dollars, right? Wouldn't it make sense to buy some Bitcoin or inflation hedging assets? Because the inflation is not doing you any favor at all. See, Tesla bought $1.5 billion in Bitcoin in the first quarter of 2021. Now, if they had held that $1.5 billion in US dollars, even if the US dollar in terms of dollar value goes down by 2%, they suffer a loss of $30 million. Now, instead, look what happened. Now, Tesla bought Bitcoin in the first quarter of 2021. They have not only made $100 million of realized gain on Bitcoin, they've also made another $900 million of unrealized gain on their Bitcoin holdings. And they've done pretty well for themselves. And they only bought Bitcoin in the first quarter of 2021, right? Bitcoin today is trading at roughly $58,000, a very good price for the long term. And JP Morgan, after I made my last video, have given advice saying that investors should put 1% of their portfolio in Bitcoin, and they've recommended it. And this is very much in line with my recommendation, which is 2% of your assets, your total liquid asset in Bitcoin. It's probably not a lot of money if you are a small investor, but it could be a lot of money if you are a large investor, or if you're an institutional investor, or if you are a high net worth person. That 2% could mean a lot. So long-term basis, I can only see more companies, more high net worth individuals, more ultra high net worth individuals buying more Bitcoin. It's only a matter of time that they start realizing how screwed up a situation is with regarding inflation. And this is a very serious issue, and we're just beginning to see the effect of it hitting the market. So we'll see the full results more clearly as we been able to stop these very crazy money printing and look back at the damages that's been done. So, but it's not that time yet, and right now, as of right now, we're still printing a limited amount of money, yeah. So that's about it for today's Bitcoin investment thesis. So again, everything I've said here today in today's video is my personal opinion. Please do not take this as financial advice. Do your own due diligence, do your own research before investing in anything. Be responsible for your financial future. And I hope this helps you.